Never has our society consumed so many raw materials as here at the beginning of the 20th century. The emergence of new economic powers like China and India has set off an explosion in demand. This scramble for commodities has sent prices through the roof to the point where, in 2008, hunger riots broke out in developing countries. But China's insatiable appetite is not enough to explain the soaring prices. Clearly, some of the responsibility must fall on the markets themselves.
We can't afford a situation where speculators artificially manipulate markets by buying up oil, creating the perception of a shortage, and driving prices higher.
But these speculators Barack Obama's talking about, who exactly are they? How do these famously complex and opaque commodities markets actually work? To answer these two questions, you have to speak to the leading players in these markets, the commodities traders, who buy and ship the merchandise, then resell it. They're all members of an old corporation, the world of big business. The very first rule of this corporation is secrecy, and secrecy tends to feed people's imagination.
A trader is a company or an individual who buys merchandise in order to sell it on at a higher price.
It's a job where you hate risk, but our work's entirely based on taking those risks.
We're not there to rob people. We're there to take risks, and if we get it right, make money.
We are merchants. We are market makers.
The commodities traders have made Geneva the hub of their activities. It has the banks and the tax breaks, so no less than 400 trading companies have based themselves there, among them some of the giants of the sector. Vitol is the world's leading oil trader, with a turnover of $300 billion. And then there's the club of 4 big agribusiness companies, who between them can lay claim to 80% of the world's grain market. They call them ABCD. Tucked away in the discreet canton of Zug, the Glencore Group is as powerful as it is secretive. With a turnover of over $250 billion, it's a player on all the commodities markets. But how much do we really know about these business giants? Almost nothing. Here on the shores of Lake Léman, the commodities traders cultivate anonymity and are notoriously camera-shy. The multinationals stick to their basic rule and won't talk to us. In a year-long exchange of emails, the Glencore Group will demonstrate its perfect mastery of the art of never saying no. The only company that will, through the voice of its managing director, explain its choice to remain silent is Louis Dreyfus Commodities.
In the past, we have too often noticed a tendency on the part of certain people to reduce the debate to a conflict between rich and poor, multinationals and small local farmers, technology and purity, etc. I hope you'll be contributing to enriching the debate to take it beyond the usual moralizing themes, as helpful as they may be. Best regards.
Meanwhile, though, other businessmen accepted to meet with us, such as Gilles Chotard, until recently an oil trader for one of the world's biggest oil trading companies.
Show me a top university graduate, a mining engineer, mathematics, philosophy graduate, and I'll show you one of the world's worst oil traders. A trader will tell you, well, this is the playing field, just go for it. Let your experience, your intelligence, and your nose for risk be your guide. And sometimes we screw up, good and proper. To give you an idea, on a $100 million cargo, you're trying to make $100 million. And if things are really volatile and you make a mistake, you're going to lose $3 million. So you're risking $3 million to make $100 million. And that's a really tough business, and only the best survive.
According to the traders, Mark Rich was the best. It was he who, back in the 70s, revolutionized the oil business. A mythic figure in whom all the ambiguities of the profession were incarnated.
Yes, I worked in his company. He was an extraordinary guy. He could speak 5 languages. He could absorb information and remember people and facts in the most extraordinary way. He had an instinct for risk and a talent for networking. He was our guru, really.
Everyone who met him will tell you Mark Rich was a great businessman. But on the human level, well, that was another story.
To this day, the name Mark Rich is associated with a scandal that took place in the 70s. In 1978, the mullahs seizing power in Iran led first to Iranian crude oil supplies being cut off and then to an American embargo. Both economically and politically, it was devastating.
Mark Rich made his fortune in the 70s by setting up trade between the Shah's Iran and Israel. But then he held on to his positions in the Ayatollah's Iran and kept trading in Iranian oil right through the Tehran hostage crisis at the American embassy.
Mark Rich now found himself on the FBI's 10 most wanted list and had to seek asylum in Switzerland. Until the day he died in the summer of 2013, he would never again set foot in the United States.
Clinton even gave Mark Rich an official pardon, but he never came back to the United States. I'd say Mark Rich always lived on the edge.
Ethically?
Ethically, well, no, he had no ethics. And he was even on the edge of what was legal and what wasn't.
Just how far can you go in business? Between Mark Rich and Glencore lies a very shadowy commercial zone. But let's get back to basics. Traders are first and foremost merchants, and they've been around for centuries. When the Amsterdam Stock Exchange first opened its doors in 1611 in a public square, business was booming. Prices, quantities, quality, delivery dates, all the arts of negotiation were in play. "400 years later, the rituals are still in place. In London, for example, where in the tradition of a glorious past, metal prices are called out each day at auction. It's a coded world for the initiates. As ever, if you want to trade, you still have to know your product. On the dockside at Le Havre, the cargoes of coffee keep coming in. It's the most widely traded commodity in the world. In this historic square, rich with the history of coffee trading, there are still some big traders, like Patrick Masson, 30 years on the job. He took over and saved the Jobin Company, founded in 1871. These days, he works for the world leader, the German Neumann Kaffee Group. It takes him 10 minutes by bike to get to the office and to the worldwide coffee market.
Washed Bahia at $2.99. That's pretty much the best in Brazil right now. I can send you a sample. I think I've got some in. The Morago, absolutely. Liquid Ambar MS. It's not rubbish. It's the real McCoy. Not Mickey Mouse. What we do is buy coffee and sell it according to customer demand. Our two main risk areas are first geographic, which means you have to know your suppliers who are selling the coffee at source. Then there's the price risk, because prices can vary greatly. That means if you've already been selling coffee to someone at, let's say, 100, and the market's gone up to 300, well, you have to honor your agreement. And that's the security we offer our client. Little bit old. Don't know what it is, but it's a bit old. They want to sell us these coffees, but there's no way we're going to buy them, because they're no good. It's just not the quality we should expect from these coffees. It's really not what we're used to. Well, that's really bitter. No good, it's rancid. What we're really all about is the product. We know about coffee. We know how to promote it and how to describe it. We do our best to advise our customers on quality, on blends, etc. It's the product that counts.
London, along with New York, is one of the two main centres of the coffee trade. That's why there are so many traders in the British capital. Tarek Al-Qasinda used to work for one of the biggest coffee trading companies until he launched his own business. He's passionate about the product and about the market as well.
It's fantastic. You have the markets move. It's really interesting. It's one of the most volatile commodities in the world. It's fascinating. One year you have a huge crop, the next year you have a very small crop, compensated by a massive crop in that country or a smaller crop in that country. And all these numbers just are really interesting to play with. I travel quite a bit. I travel once a month at least to a producing country. See my clients, talk to them, try to do some business, see how it's going, look at the crops, how they're developing. You know, I've been doing it for the past 25 years, so.
Above all, commodities traders are globetrotters. Business isn't just done over the phone or by computer. Armand Ezerzer is on a business trip to Taiwan. He started out in sugar and dabbled in cocoa until he settled on cotton and founded his company Mambo Commodities. He's off to meet the big cotton spinners in the south of the island to sell them cotton. He's accompanied by Apollo Chang, his local agent, and Massaoud Mama, his associate in Togo.
Cotton traders are forever looking at cotton. It's hard to imagine doing this without touching it, seeing it. What prevents you seeing it as often as you'd like is all the office work involved. But you're still ticking all the boxes in your head. This cotton is like this, it comes from there. We're always being sent samples and checking them out in the sorting room. And that's how we keep the spinners satisfied and supply them with the cotton they want from year to year.
Spinning is the starting point in the worldwide textile industry. The cotton is transformed into spools of thread to supply the clothing factories in Cambodia, Laos, Bangladesh, and Ethiopia. The Yihua Company is one of the biggest spinners in Taiwan. Thousands of tons of cotton are bought every year by Mr. Tsai, who only does business with the biggest traders and is famously tough to deal with.
Yes, we are handling grey cotton, yes.
Today, somebody called me 79.5 for the 1 inch and 1 inch. Yeah.
It depends for 41 or 31.
You mean 41, 31? 31. Middling.
Middling?
Yeah, middling.
It will be difficult for me to provide at this time of the year. I'm not the only one not looking for it. And there is a big premium to pay to have it. We have some strict laws. And even on strict law, this is really the best you can find.
Yeah.
We ship it immediately.
Yeah,
we have it in.
You arrive at Taiwan.
Yes, yes. But we have to agree on the quality. If you want, you have the samples here. We agree. We send you some sealed sample, and it will be exactly what you are going to receive, without fail.
I made him a firm offer. He just has to snap his fingers and it's confirmed. There's nothing on paper, but it's a firm offer. That's how it is. No need to have it on paper. And it's very misleading, because it can all seem to happen so casually. And then the deal's done, just like that. In a couple of seconds, the deal will be made, and there'll be millions of dollars in it. Because 82, that's 82 cents per pound of English cotton, which makes about $1,800 a ton. $1,800 times 500 tons, so we're already at $1 million just for what we were talking about this morning, for a few minutes. So there's no room for mistakes about the terms or about what you're promising, because if you get the terms wrong, there's no going back on them. It's just like in the school playground. What's said is said.
Millions of dollars just on somebody's word. That's how they do business in the cotton trade. But selling's only part of the job. You have to know when to buy. Being a trader means, above all, being prepared. To be prepared, commodities traders have to analyze and interpret information from all over the world. Jack Kane is a rice trader. He works from Geneva, where he runs the Nouvelle Commodities Company.
Some of the major groups have research departments that keep a constant eye on supply and demand, so they can anticipate the relationship between the two, in the short, medium, and long term. I think that's how decisions are reached. Then the results will turn out to be either right or wrong. And depending on the positions that are taken, they'll determine the profit or the loss made on the transactions.
And that's what's known as feeling the market?
Yes, it certainly isn't an exact science, but that is indeed what we call feeling the market.
Paul Perk is a Dutchman living in Brazil. He's an old hand at international agricultural commodities trading, and he's learned to check his sources.
Information's the key. Because if one of your colleagues gives you some wrong information from China, say, telling you, for example, that China has enough corn this year to feed all its pigs and chickens, because he's been out to look at the harvests and he reckons everything's okay, but then it turns out it's not okay at all, and China suddenly turns up on the market and imports 10 million tons, then that's for sure going to completely change the prices.
And what happens if you haven't seen it coming?
You lose a lot of money in general.
Agricultural commodities such as wheat represent a considerable gamble. The traders follow the harvest very carefully and can quickly check out whether their information is accurate. To be ahead of the game, though, you need the right contacts and a good network. In 2010, Russia suffered a terrible drought, and the wheat harvest was looking like a disaster. To prioritize the needs of the Russian population, the Kremlin decided to stop all exports. Within 2 days, the international market price of the grain had risen by 15%. The Glencore Group found all its connections revealed on the front pages of the financial press.
Right from the start, it's really been a very controversial firm, and it's often been in the news, notably in 2010, when it admitted speculating upward the price of corn and wheat. And this at the time Russia was having a drought that year. And at the same time, they publicly demanded that Russia ban all grain exports. Russia didn't waste any time complying. So within a few days, world food prices took a brutal rise of 30%. And that way, Glencore made a considerable profit.
If Glencore heard on the grapevine from its links with certain oligarchs who were close to Putin, if they knew for sure there'd be an embargo, well, that's when you take positions. It's information. It's pretty close to insider trading, but it's a worldwide market where insider trading does happen. Well, nobody's a saint. And in quite a few countries, let's not kid ourselves, it does go on. Things are corrupt. And there are some trading companies that are more or less ethical, and others, some of whom you've mentioned, who have no idea of ethical behavior.